I guess we can honestly get started. So, the way this is going to work is, as I showed in the screenshot before, we have these tickers right here. I'll be sharing this watchlist, this Google Doc with you guys in the night or something. I'll post like the ticker itself, right? So the first ticker is SPY, right? So we'll start off with SPY. Let's make this fancy, you know what I mean. All right, so SPY, I already have this plotted out since obviously I trade SPY literally all the time. It's pretty simple. There's three main zones that I've plotted out so far. So currently there is a supply zone from let's see, there's a demand zone, my bad. There's a demand zone. Let me show you a better chart. There's currently a small demand zone from $444.19 all the way to $440.65, right? So let me post a screenshot on the Google Doc. I'll put down the numbers and everything so you guys can either add it on your own charts or stuff like that. So just give me a moment. Just give me one moment. I do not trade with Heiken Ashy candles. What I do is use Heiken Ashy candles to help me easily plot down supply and demand zones. I actually have a video that's posted on YouTube where I go over the strategy, so please feel free to take a look at that. It's fairly easy to do if you just follow it. So our first demand zone, right? Let's zoom into this area right here. Our first demand zone for SPY itself. Oops. Let's see if I can get us. Where'd it go? Our first demand zone is it's from $444 all the way to $440. And if you guys don't remember basically how demand zones work, if the stock trades into it, right, there's a higher possibility of it reversing into the upside, right? Versus the supply zone, if we trade into a supply zone, there is a high chance of it trading back into the downside. But whenever a supply zone or demand zone is broken through, that means that the zone is less validated, right? Or anytime it touches it, it reduces the efficiency of the zone, right? So that's why, let me just remove this. That's why you always want to keep an eye out for that. Like we had the supply zone right here, right? And actually, if you see, we've tested the supply zone. The supply zone actually started over here, right? So we tested this supply zone 2 times. And then there was a 3rd time right over here. And if you guys remember the rules from the video we had 3 weeks ago, no, not 3 weeks ago, a month ago, basically, talking about supply and demand zones. I went over the rule, basically going over how if a zone is touched or it's broken through, it invalidates the zone and it makes it weaker. So that's exactly what happened here, right? We had SPY trade into this supply zone we had plotted from a while ago twice, right? Which made this zone so weak and easy to break through that the next time SPY traded into it, it easily broke above it. Now, of course, if you could see over here, we did break above it, but then we we started trading back into the downside. But regardless, this zone is no longer valid, so that's why I actually want to remove it in front of you guys, so you guys can see that, after a zone gets invalidated, the better thing to do is to just honestly remove from your charts. If you want to keep it as it's just like a reference, that's absolutely fine. The only thing is it'll cloud your judgment for future trades, so I personally wouldn't just strictly look at that zone, especially if it's broken through. So that's why we're not going to listen to that zone. Now we have another supply zone here for SPY at 4. Let's see if I can get it. Oops, nope. I have it at 468 all the way to 471. I'm going to post it on the Google Doc. Maybe I can maybe I should share it with you guys right now, so you guys can look along, stuff like that, so it's less confusing. Let's see. Just give me one moment while I share this to you guys. Okay, sweet. I'm gonna post in announcements. So you guys could feel free to hop on so you could actually see me typing in the numbers yourself. But yeah, so those are the demand zone and the supply zone that I have for SPY currently. Again, it's better to always have just a few zones instead of multiple, because not all zones are always going to be respected. Now when it comes to hold on, let me zoom back out. Now I'm also going to be trying to do a few like resistance and support levels too for some tickers, so I definitely don't mind showing you guys that as well. I have one plotted out for SPY. So as you can see right here, we actually have support at 448.99 and resistance at 458.17, right? So that's something you should definitely take into consideration. Support levels and resistance levels are also very crucial, just like supply and demand zones. If you guys don't know what the difference is, demand zones are basically an area, right? Versus
you are up for elimination.
Versus basically a support level or resistance level being a price point, right, that you look at. So as we see over here on our charts, you can see that our support level is at 448.99, right? So I'll just put that right here. And then we have a resistance at 458.17. Now you guys must be thinking, wait, but Kevin, there's so many other supports and so many other resistances that you could be looking at. Absolutely, that's absolutely true. But I'm a huge believer in just keeping the chart simple. I do find that just clouding your chart with an enormous amount of stuff will just always cloud your judgment and make you either chase trades or force trades, or just not look at the right technical analysis when you should be. So that's why I want to keep it as simple as I can. So these are the current zones and levels that I plotted for SPY. So we finished that. Now the second most requested ticker was actually QQQ. So we'll take a look at that in a moment. Just want to ask you guys, is this format okay? Like what I'm doing right now?
Yes, it is.
Like, okay, all right, sweet. Just want to make sure. All right, let's head to QQQ now. So as I've said to you guys a million times beforehand, the way I always start off is by looking at the 4-hour chart, then the 2-hour chart, and then the 15-minute or the 1-hour chart, right? So currently right now we're looking at the 4-hour chart. We could see right here that an easy zone to plot out will actually be right over here, this demand zone that we have from around 354 all the way to 352, right? Let me just take a screenshot of that. Actually, no, I'll take the screenshot later. So that's our first demand zone, right? It's from, if you guys can see on the screen, from 354.45 all the way to 351.92, right? And then when it comes to supply zones, right, it's going to be this, since QQQ somewhat similarly moves like SPY, we could see that it had this double top right over here, and it broke above this supply zone that was built over here, right over here. Right, so we're not going to really consider that as a supply zone. Instead, we're going to look over here. We'd rather look more towards the future than what already was invalidated, right? So we have another tiny supply zone right here from 388.13 all the way to 384.65. Again, I'll be putting down screenshots of this in the Google Doc, so if you guys want to follow along which numbers I'm talking about, you guys again just could go to announcements and just go to this link right here. I'll tag you guys in it again, so just go over there. So those are current supply and demand zones. Again, as I said, we're going to keep it simple, not overcloud and not over, just fill up our charts for no reason. Now when it comes to what's it called? Support and resistances, if you guys remember from yesterday's live, which if you did not attend, don't worry, I'll be posting the recording of that tomorrow. I'll try posting this recording by tonight. It's going to be hard to, but I'll try my best. But you could actually use volume to plot out very important levels, right? So we can see that right now, let's see if there's anything good. I mean, you technically can use this, you can use this top right over here as a resistance, right? Because it is a top, or like a high, right, of the past, what is it, almost month. So let's just put a resistance right here. We'll label this resistance. The price for this is, sorry, 1 second, is 371.78. So how do we trade resistances, right? Resistance levels, right? So what you would want to do is you could trade it either two ways. You could trade it to trade the reversal, right, into the downside, or you could trade the breakout. And the way you can determine whether it's going to be a reversal or a breakout is by keeping an eye on the volume, right? So let's say we have, let's say for example we're testing 371.78, right, on QQQ, and we have a pickup in volume, but then we see this very tiny candle like we do over here. I know this looks ugly right now, but you see this tiny candle, right? But we see this high volume. What this means is that there's high effort from buyers and sellers, but there's low results or weak results happening on the chart. What this means is that even though it's at this resistance level and there's high volume, there's not enough buyers to actually push this candle above this price point and show strong a strong result. Instead, it's showing a weak result, which is almost like a doji candle. What are we going to call it? Because I suck at terminology. I just like to just look at it plain and simple. But you could see that it was a very small candle, right? It has long wicks, and you could see right after that we started trading down into the downside, right? It was like a reversal. So that's how you trade resistances. Now, how do you know it's going to break out? Well, if the price were to break above the resistance level, and the volume is picking up, and also the candle is big, right, and shows a strong result. What I mean by strong result is, like this candle right here is a strong result, right? This candle right here is a weak result. So if we had a candle like this over here and breaking above the resistance level, we can potentially enter a trade. Now keep in mind, not any strategy is 100% correct, right? But strategies like these, the strategies like these are gonna
right here, cause bro.
Strategies like these would just definitely show higher accuracy and higher efficiency compared to other strategies. So that's how you trade resistances. This kind of ties in to what we actually spoke in yesterday when it came to volume analysis. Since a lot of people couldn't attend to that, I did want to kind of briefly go over that. So hopefully that does help for those who could not attend yesterday. That's how you would basically trade resistance levels using volume analysis, right, and price analysis. It's basically vice versa for support, right? I mean, not even vice versa. It's basically the same thing for support levels if you break through versus trading the reversal on it. So keep that in mind, right? So 1 second. Let me just take a screenshot for this and add on to Google Doc so you guys can see it. Should I honestly label these? I feel like I should label, yeah, you know what, let me just quickly label these. Just give me a second. Just give me a second while I label this for you guys. But as you guys can see, it's not something that just happens quickly, you know, like plotting all these zones. It takes time, and you just have to be patient with it, because if you plot out these zones by yourself every morning before market open or during market hours, right, it's always going to help you out in the end, and that's what's important. You have to realize that nothing works out without patience, so definitely want to keep that. Yep, sorry about that. I actually broke my mouse, but I fixed it. So what we're doing, yeah, we're just plotting out this demand zone right here, so just give me a second. We'll be moving on to the next ticker very shortly. Just want to take a screenshot of this before we do. Again, if you guys want to follow along on the Google Docs, you could easily find it on the announcement tab, right? So definitely take a look at that. Oh man, why does it keep on taking me to the next page? Never mind, I forgot. I'm not on natural paper. It's not like I'm wasting something. Alright, so as we said before, the supply zone for this area is, for QQQ I mean, it's going to be 384.65 to 388.13, right? Then the demand zone that we plotted was 351.92 all the way till 354.45, and we had one resistance level, which was the top of the recent high, which is going to be 371.78. Alright, sweet. Okay. The next ticker that was highly requested was FUBO. Not highly requested, but it was requested, so let's take a look at that. I actually never traded FUBO before. I've honestly never heard about it before. Okay, so this is going to be kind of a hard stock to look at, in my personal opinion. Because there's only... This stock has been bearish, right? And there's only supply zones on this. So... like, let's see. Let's see, just give me a moment. Alright, like, I guess you could say there's somewhat of a supply zone. Oops, wrong thing. There's a supply zone right over here, but other else than that, it's kind of it, because there's obviously, like, some intermediate demand zones, like, right over here. But at the same time, it's just not worth plotting, because it's kind of like a penny stock now, and penny stocks don't always follow supply and demand zones. So honestly, the only supply zone that we'll have for FUBO would be from 1044 to 1124, right? I'm honestly not gonna put that into Google Doc. Actually, you know what, why not? I'll just put it since it was requested. Just give me a second. Let me do this really quickly though, and then we'll move on to another ticker. Again, if you guys want any tickers plotted, just feel free to put them in the Ask Bishop channel. Oops. Okay, I'm gonna get pissed off. Why is everything going on to the next page? I feel like I'm doing something wrong. Okay, supply zone is from 1044 to 1124, right? And that's all we're gonna honestly look at, since this is kind of penny stock and we don't want to focus on that too much right now. The next ticker is ULTA. I haven't traded ULTA in a while, actually, so let's definitely check that out. I might as well just take this onto another page. Alright, so ULTA, let's see. What the heck? This is the most in-range trading I've ever seen for a stock. Like, look at this. This stock has been in a range for now the longest time. You could say that, let's switch this over to candles, not bars, since most of you guys don't understand bars. Whoops, wrong one. I'm acting so stupid. This thing has been literally trading within a range, which is crazy. It's been trading between 359 to 359 to 418.40, which is actually pretty insane. So actually, well, this is actually perfect, and this ties into what we were actually reviewing yesterday. We can actually we could look at this and we could actually trade either the reversals, right, when we touch the top or bottom of the range, and we want to trade to, like, let's say for example ULTA trades up to 418.40, right? We could look to trade the reversal, right, into downside to the bottom of the range. So this is really what's cool about ranges, is that you can easily trade within these ranges, and you can actually make a lot more profit because ranges are actually very predictable. And they're also very predictable when it comes to figuring out whether there's fake outs or breakthroughs or breakouts, right? So that's in the video that we went over yesterday. That will be posted tomorrow, so you guys could definitely look at that. But honestly, what I would just look at right now for when it comes to ULTA is just trading between this range, right? You want to look to trade both of these support and resistance, right here. So let me just put that down in our Google Doc. We'll just say that the resistance, right, these are rough resistance levels. You don't always have to make it accurate, right? You could just trade based off of it coming close, the stock coming close to that price, right? So one piece of advice: never enter a trade if you cannot monitor it, right? So let's say if you have class, right, since some people are actually high school students here, right, or college students. Let's say you have like a class coming up and you want to get into a trade. If you cannot monitor your trade during class, which of course you shouldn't be because studies comes first, you definitely don't want to get into that position, because you don't want your contract, right, or your shares just going deep into the red because you couldn't monitor it, right? So always keep that in mind. Let me just write a note for it. Has there, I don't know if you guys, for whoever follows ULTA, has there been any news about, any news for ULTA? And do I think that FUBO has bottomed? Honestly, no. Since I just asked about ULTA, I'll just quickly go back to FUBO. I honestly have never heard of FUBO. 601 is obviously a very low price to compare even to what it was when it a few years ago, but this is a stock. FUBO TV. Oh, I know FUBO TV. I've seen it's like that streaming service, right? It streams like sports. Honestly, what I would recommend is just looking away from the sticker and looking more at big stocks. As I've said, big cap stocks are always the easiest to trade and the more safer stocks to trade versus small cap stocks like FUBO, right? I'm pretty sure FUBO is a small cap stock, right? If you guys don't know what big cap stocks are, that's stocks like Apple, Microsoft, AMD, NVDA, and then you could also trade ETFs, right? SPY, IWM, QQQ. We already plotted, what's it called? We already plotted SPY and QQQ, so we'll get into, what's it called? We'll get into IWM in just a bit, but yeah. So, I personally I never trade earnings, right? Only reason why I do not trade earnings is because earnings are so risky to trade. The smartest thing you can do when it comes to trading, let's say a stock is approaching earnings, the best thing is to honestly just trade the run-up. Usually for most stocks there's a run-up, right, when it comes towards the earning. As you can see right here, we had a run-up for Levi, which Raker was talking about right here. So what that means is, since some of you guys don't know what run-up means, basically what that means is, let's say the earnings, what is it? It's on April 6th, right? So before April 6th, a lot of people actually start buying like calls, or start buying, not calls, but people start buying shares, right? And stuff like that. Institutions, they also start buying shares early so they could profit off the run-up, because a lot of people get hyped when it comes to earnings, and they start buying and buying and buying and buying just for the potential break. What's the best word to say it? What's the best terminology to say it? I guess like they're trying to enter early so they could profit most if the stock spikes up, I guess you could say, right? But the smart money, right, basically institutions, what they do is they buy early, right? And traders like me and stuff like that, the smart analysts, smart traders, what they would do is actually buy calls, right? Or calls, right? Of course, if there's confirmation, you just don't buy calls before earnings and be like, okay, it's absolutely going to go up. No, of course, wait for confirmation first. But what you would do is you would trade, you would basically trade the run up, and you would buy calls, and it'd be like a swing trade, right? And since the stock is getting hyped based on the upcoming earnings, right, you would actually profit off of either holding shares or holding calls. Of course, this is not always going to work, but it works majority of the time, especially for big cap stocks. I'm pretty sure like some big stocks are having earnings soon, right? Not exactly sure. I might be absolutely wrong. Yeah, I'm wrong, I guess. But yeah, I never trade earnings in terms of like, let's say it's April 5th and earnings is on April 6th. I never hold contracts through the night or through the meeting where they release their earned report or whatever it's called, because it's way too risky. It's gambling at that point. A lot of times you don't really have that much analysis to go based off of. I know an analyst that actually does pretty well. His name is Rodrigo. He does pretty well when it comes to trading earnings, but even he can't predict every earnings trade accurately, right? Because it's a gamble. It's not even his fault. So, yeah, hopefully this is actually helping you guys out, because it's important to always plot out supply and demand zones. PayPal, okay, I'll add that onto the list. Oh my goodness, my throat has already gone so dry. What are we next on? Apple, sweet. Okay, I used to trade Apple a lot before I started thinking it was boring. Let's see. Apple. Alright, let's see. Just give me one moment, let me just take a sip of water. Oh wait, no way, I actually didn't know that. PayPal partnered with ULTA? Wait, how? They're two different... What? They're not even close. How'd they partner up? I went to ULTA the other day with my girl, and things are so expensive. It's crazy. There's like this hairbrush that's like $150 because it's like a volumizer or something like that. I'm just like, dang, no wonder why ULTA is a popular stock. I personally do not use option flow, but I know some traders use it. Instead of using okay, if you want to look at flow, look at order book instead of option flow, because option flow is not always going to give you accurate, it's not always going to show you accurate stuff. It could literally be dumb people just entering into huge positions, just gambling all their money. It will pop up on the option flow block, right? Whatever it's called, and it just doesn't work out. Fluffy might, I don't know if he uses flow or if he actually uses the order book. There's a difference because order book actually goes, it uses, he uses flow. Okay, I mean if he uses it, that's pretty nice. I personally whale stream, yeah, I've heard about that before. I never used it. I personally would recommend the order book versus option flow. Of course, that doesn't mean I'm saying that option flow is bad. I'm just saying that I find the order book more efficient or better to look off of, because order book talks about shares that are traded, right? And shares are usually traded among institutions. So that kind of gives you a little peek through about what people are looking at. Not people, institutions are looking at. So if Fluffy uses flow, that's pretty amazing, since I know that he's actually a pretty good analyst when it comes to swings, so that's pretty cool. But alright, it actually seems that we have a few supply and demand zones plotted out for Apple already. Again, this supply zone right here is actually no longer valid because we broke above that. Let's just check the 2-hour chart really quickly. I don't know how the heck I got this demand zone. It's on the 1-hour chart. No, it's not even there. Let me try to see where I got this from. See if it's valid or not. Oh yeah, okay. It was the okay, so it was actually the 15-minute. Let's extend this box. Let's extend this box. Alright, let's see. Okay, is there any supply zones? Not really, since it kind of broke up. Oh yeah, of course, there is this supply zone right over here. Let's see. Just give me one moment. I'll share like the prices for this. Okay. Let's extend this to the 14th. Yay! Now it's bigger. Alright, where does it start off at? 179. If you guys are like looking at how I'm plotting these supply and demand zones, you could look at our first video that we had, where I went over how to actually plot them. The link is in the live recording channel in our server right over here. I'll show you if you guys are new. In this channel right here called live recordings, you see all of the videos that I've recorded. So definitely go and watch this video right here. This talks about how to plot it and stuff like that. So that's probably our second, or probably one of our most important videos. So yeah, just give me 1 second while I just type this out. Okay, so let me just take a picture of this, right? Let me remove this because we don't need to see that. We don't need to see this. We don't need to see that. Definitely don't need to see this. Honestly, no. Let's actually see if we have a resistance right here. Yeah, we actually do. Okay. Alright, so we do actually have a resistance here. Let's see. So we have resistance actually at 176.68. Right? Let me just write that over here. Resistance. Again, I told you guys earlier in the live how to trade resistances. And let's see if this is a support. Okay. This is actually a support as well. So let me put that here. And just for those who don't know, the light blue candles represent bullish candles versus the pink candles represent the bearish candles, right? So on your charts, basically these candles, the light blue candles would be the green candles versus the pink candles would be the red candles on your chart. But alright, let me just quickly take a picture of this so I can put on the Google Doc. I should actually try doing this on Sundays if I have time. If you guys actually like this format, if you could put in the main chat if I should actually keep doing this, where I go over tickers that you guys request and I plot out resistance or support levels with supply and demand zones. Tell me if you are interested in me doing this, because I do go based off of feedback. I don't just, just do what I feel like doing. If it's valuable to you guys, then of course I want to continue doing it. If it's not valuable, then what's the point of me doing it? You know what I mean? So let me know in the the main chat right now, and I'll check right after I update this. Just updating the support. The support is, what is it? It's 171. 63. Then we got resistance at, whoops. We got resistance at 176, 68. Right? So there you go. That's for Apple. Just finished Apple. Okay, sweet. Just as long as you guys are definitely liking this. Okay. I'll definitely try doing it on Sundays. I do sometimes. I commute. Not commute. I go to college. So some weekends I go back home in New Jersey since my college is in Long Island. So I do my best to come back on Sundays. If not, I come back on Mondays. So if I come back on Mondays, then it's hard for me to actually do it on Sundays, because when I go back home, I'm in an Indian household, right? Because I'm Indian, so there's not a lot of peace and quiet, right? You either have one of my 2 dogs barking, or you have just commotion. So I'll do my best to do this every Sunday, if not every other Sunday. But yeah. Alright, so glad to hear the feedback though. Does this look right from Microsoft? You know what, Chris, since you asked, and I remember Microsoft was actually on this list, right? I'm pretty sure it's usually a common stock. We'll just put Microsoft right here. Where is Microsoft? I know I put it on here somewhere. Why do I feel like I'm blind and I'm missing out on it? Okay, whatever. I'll just put it right over here. I'm pretty sure you guys cannot edit this doc, right? I definitely don't want anyone editing this. Okay. Because I don't want some troll just coming in and wrecking this up. Just confirm none of you guys can edit the doc, correct? one of you guys can just type in the main chat to make
That's
sure
right.
that
We can't edit them.
Okay, sweet. Okay. Krish, I believe in you. So let's just check. Let's check out Microsoft. Oh, geez, what the heck is this? Oh my gosh, that's sad. All right, let's see. Oh, I think I was making a joke. That's why that line was like that. Who knows? All right, so straight off the bat, we can see that there's actually 2 supply zones that we could be looking at. One's going to be later on. Let me plot them out first so you guys could actually see. Again, if you guys don't know how to plot supply zones, just look at my previous video not previous video, but one of my older videos on the YouTube channel that goes over how to plot these. Very easy to learn, to be honest. Alright. Let me just plot these zones out, Krish, and then I'll confirm with you if you actually had it right or not. Oh. Actually, never mind. Alright, so these are the zones I got. Let me just quickly add the price levels to it so you guys can actually see. So let's edit the properties. This is going to be a demand zone. Chris, check if you have these prices right as well. So for the first demand zone, right, it's going to be between 282.38 to 276.29, right? So did I actually get this on point? Oh wow, look at that. 282.38, sweet. Okay, so demand zone's at 282.38. Hold on, wait, let me just see one quick thing. Just want to make sure. And then we have a supply zone at, just edit this. We have a supply zone from Microsoft at let me see, 316.49 to 319.33. Right. So that's our supply zone. It's small, but still, you can see that we kind of already rejected off of it right over here. I didn't actually see that, but we actually kind of rejected off of it. Then we have another supply zone. Let me, sorry if my voice sounds bad. I was fasting today, so I haven't had a lot of water. And my throat's still bad from a week ago, so it's definitely not pleasant, that's for sure. So I'm sorry you guys had to hear it. So we have another supply zone from 340 and 40. Okay, wow, 340 all the way to 343, right? Yeah. Okay, sweet. So let me quickly take a screenshot of this. I wish Thinkorswim gave like vibrant colors than this dumb old red. It's just boring. Chris, just give me a second. I'll get to your actual prices versus mine. Alright, so we have 2 supply zones, right? So we have one supply zone from 316.49 to 319.33. Just posted that. Then we have a supply zone. Why do I keep on putting zones? Zone 2, which is from 340.44 to 343.28. And then we have a demand zone from 282.38 to 276.29. Now let's see if there's any what's it called, important resistances or supports. Again, I guess I'm just checking which one's a better price. Okay, so we actually do have, okay, wow, I just said we do have a support level, right? We have support at 305.26. Let me just write that down. We have support at 305.26. For some reason, I still can't get ULTA out of my mind. I actually want to trade ULTA now. We'll see tomorrow how that goes, if we actually do want to trade her or not. But we do a support there, and we could basically use the supply zone as resistance, so we don't really need to plot down the what's it called, any resistances, because we already have supply zones, so there's no need to plot any support levels. But my supply zone is shown from 338.92 to 343.81. Wait, what? 338.92. Krish, not to sound rude, but how do you get that? What time frame were you looking at? You're looking at the daily? I mean, if you're daily, if you look at the daily chart, you can technically have a zone starting at 338.87, and honestly, nice call out, because I think I might want to edit it to that, because the reason why I'm saying that is, if you look at the 4-hour chart, the movement of the bearish candle after this bullish candle is actually not that strong until later on. But if you look here on the daily, we can see that following this bullish candle, the candles are actually stronger compared to what the 4-hour is. So actually, Krish, nice job on seeing that. So let's edit the supply zone to 338. I think it was 87. Let me change that for the rectangle as well. You made me proud, Krish. You made me proud. Alright, yeah, so there we go. Now we edited our supply zone. Again, nice call out, Krish. As you guys know, the bigger the time frame you go for your supply zones, right? Or your demand zones, the more likely it's going to be respected, right? But obviously this means that the higher the time frame, the longer away the zones are, and over time zones do become weaker, right? So if like maybe 2 more weeks go by and we still did not test this supply zone, we actually, sorry, I had to burp there, that's unprofessional, my bad, but we actually might as well remove this, or not remove it, but we might not look at it as much, right? Since it's been a long time, and all these unfilled orders in the supply zone might as well be liquidated at this point. So, but it's definitely nice. Nice job pointing that out, Krish. Let's go back to the 4-hour. Yeah, you should be the one streaming. I suck at this. No, I'm just kidding. I don't know how you're a partner of mine on the server, yet you haven't watched my video. That's just disrespectful. are back to being disappointed in you. That's sad. Alright, let's see. I'm just playing around, Krish. Wow, okay. How long has this stream been going on now for? An hour now. Netflix, alright. Let's see Netflix. Okay, what the heck is gonna be going on with Netflix? Oh yeah, I remember this dump. I remember this dump too. That's crazy. Alright, straight off the bat, you guys can see where we can easily plot out a demand zone right here. We got this demand zone from 343.93 to 332.60. And then, do we have a supply zone? I don't know if I really want to count this as a supply zone. We could count this as a weak supply zone. What I mean by weak is that it's not that likely to be respected. And the reason is because the movement after it was not really strong, right? And it was not, you could see that the movement kind of steamed off or calmed down very quickly, right? Compared to this supply zone right over here, right? Imagine how many unfilled orders are left over here. This is a stronger supply zone. So, let's go to the candles and see if there's any important support. We technically are trading in a range right now, actually, for Netflix, which is between
540.
Oh, what did I do? Oh, sorry, my bad. Let me switch to price level. So we're actually trading between a range right now, as you guys can see.
106.14.
The range is between 386.66 and 366.62. You can see that we actually had a fake out right over here where we tried breaking to the upside, but we ended up trading downwards. We did have this this doji candle, whatever you want to call it, right over here. So we could see a potential reversal into the upside, right? I would personally wait for confirmation before we do that. You could see the testing of the top level of this range, right? But let's say we break below 366.62, we could trade all the way down to this first demand zone, which is at 343.93, right? Or if we break above it, we could trade all the way to this supply zone over here, which is at 427.12. So let me just quickly let me quickly put on the price level for label the demand and supply zones. So just give me a second. So demand zone starts at 343.93, right? So it's at, yeah. And then we have the supply zone starting at the weak supply zone. Okay, sorry, weak supply zone, because that's an important note that we do want to keep in mind. So we do know that we're not heavily relying on this supply zone to trade off of, but we could use it as confirmation or as a reference. And this zone starts at 427.12, and then we have one more supply zone up here, which is actually stronger, which starts off, let me check, which starts off at 515.34. Alright, and I'm going to post this on the Google Doc right now. Again, going back to, I forgot who said it, but going back to trading earnings, you could see how it's just very dangerous to trade earnings, right? So you could either trade the run down or run up whenever it comes to earnings. So just keep that in mind. But trading on the day of earnings or day before earnings, it's very risky. It always is. We could actually see here that, so this is considered a gap down, right? Because it gapped down over in the pre-market. So what that means is that the usual rule of thumb is that whenever a big cap stock or an ETF gaps up or gaps down, in the following time there is going to be a time where it's going to fill up that gap, right? It's actually a very common rule that SPY follows, right? Usually if it gaps up, that gap up usually gets filled by within like 3 days usually. What I mean by filled, right? Let's just use this gap down for example. We gap down from 508 roughly to 409. That's $100 gap down difference, right? So this is the fill up right here. We're basically filling up this gap down, right? So we filled the gap all the way up from 409, right? 409 all the way till 458.48, and there's still this area right here. Whoops, wrong thing to let me get a rectangle. We still need to fill this area right here. This is the area we need to fill, which is from 458.03 to 506.19, right? This area is still going to be filled in the upcoming future. So that's why this range is very important, because if we break above this range, right, and we actually break above this weak supply zone, we can easily profit off of calls, right? As we trade the filling of the gap down. So keep that in mind. That's how you trade gap ups and gap downs. But yeah, let me take a screenshot of this. Why is this line here? Okay, let me take the screenshot now. I'm going to be uploading onto the doc right now. What was that, Netflix? Right here. I almost dropped my mouse again and broke it. I don't know what's with me today. So we had 2 supply zones, right, for Netflix. So the first, no, that's not the first one. The first one is going to be from 427.12 to 451.68. And the second one is from 415.34 to 427.16. Then we have the demand zone from 332.60 to 343.93. And then we have the range over here, which this top part is the resistance, right? And the support being right over here. So let me just take a screenshot of this instead of taking time to type it out. Sweet. Oh, I never checked if you guys had questions, my bad. Okay. Whoa, alright. In a downtrend, those demand zones are relevant. That's not exactly true, because even when you're in a downtrend, you can potentially have small reversals into the upside when you trade into a demand zone, right? It doesn't mean that it's going to be respected again, but you can still trade off of demand zone. So there's never a time when a zone becomes irrelevant unless it's a small cap stock, or the zone has been either there for a very long time, and I'm talking about like a month or more than months, right? More than 2 months, and or the zone has been broken through. That's when the zone gets irrelevant. So do you enter a trade once it leaves the support and demand zone? I don't want to get deeply into that because you could actually see the answer for that in partly in this video and also in this video as well. This video goes more in depth of how to actually use the MACD if you would like to not just use strictly price and volume analysis. You can use the MACD to actually trade these zones, right? So definitely take a look at that. It's this video right here that goes over strategy with with how to trade it with the MACD, and this video over here goes over how to plot them and the rules of supply and demand zones that I've created, and that's been working well. Alright, let's see. Why when it leaves we can enter when it's in the zone? You can definitely enter when a stock trades into a zone, but obviously that's trading without confirmation, and that does put more risk onto your position, so it's up to you at that point, you know. Alright. So why did SPY reject the supply zone if we're in uptrend? Let me see what you're talking about. Oh yeah, that's what I was saying, like, we removed the supply zone because it got broken through, but that's what I was saying, like, just because we're in an uptrend doesn't mean that the supply zones are going to be just invalidated. They will be respected, but they won't be respected multiple times, if you know what I mean. They might be respected once, but they won't be respected multiple times. So let's say we're in uptrend, supply zones will be maybe respected once or twice at the most, and then it'll be broken through. Versus if we're in a downtrend, demand zones would be respected once or twice, but then it'll be broken through, right? But let's say we're in uptrend, demand zones will be highly likely to be respected versus supply zones in an uptrend, if you get what I mean. Do you know what I mean? Oh, okay. My bad. Alright. Let's see. Sweet, okay. I think someone mentioned me here. The 12.5 put on MN? I've never heard of MN before. Oh my gosh. Okay, you guys, one thing you never want to look at is penny stock options, because they're some of the most riskiest things ever due to the lack of volume when it comes to it. Like, look at this. This put that's out of the money is $5, yet the $15 put is $225. That's insane. That's just like, that's just not right. So honestly, I would stay away from it. But to answer your question, the 12.5 put, I don't necessarily want to answer this question, but you can actually trade based off of okay. We do have a resistance right here, right? So if it rejects and you can see a trade towards the downside, then absolutely. But you could see, look at this volume. It's absolutely terrible. It's not even worth trading. Like, out of all of this, there was just 2 good volume days, and that's the only thing that shows up on my chart. Whoa, excuse me. Oh wait, hold on. I didn't even see this. I didn't even see that Went from $9 to $12.91. Okay, no wonder why there's high volume. Yeah, I mean, puts would kind of make sense to play like the cool down or the cool off of this huge gap up, but again, it's risky to trade penny stocks when it comes to options. Keep that in mind. But don't go, if you're gonna trade it, right? If you're gonna trade this, then definitely don't go in heavy, because that will just kill your account. If God forbid it goes against your way. Yeah. Let's see. $4 a.m. No, there's currently the 12.5 put is. Oh, I didn't even see it. The ask is at you at 10. So you probably only get filled if you actually go for 10. Wow. Okay. All right. That's even riskier. The bid ask spread is so far apart that just shows you how there's barely any volume. Like, look at this bid ask spread is literally 0 to 0.5. Oh my gosh. Okay, if you seriously trade this, like, actually genuinely be careful, because it will probably ruin your account. But alright, let's go to the next. I don't think I'll reach all of these, to be honest with you, because we've been going on for an hour and 18 minutes, right? And we're only on this ticker. Wow, AMD. Okay. Alright, I like AMD anyway. Give me 1 second, let me just take a sip of water. Quick question, why do you have David MN and in parentheses David MN again? I don't know why I find that funny. But alright, let's see. You said you want me to quickly look at DDOG? Why not? DataDog. I've heard of this company. I feel like I've traded it before, but I barely trade stocks like these. So let's quickly switch to Heiken-Ashi. You said you were in deep, deep meaning in calls or puts? You're in calls. Oh, that's kind of not good. To be honest with you, this seems more bearish in the upcoming future. Like, we have this. Oh my gosh, I keep on choosing the wrong thing. We have this demand zone right here, and you could see that this movement into the upside has been this bullish movement has been cooling off, and with that volume has been dying. So we can actually somewhat expect a reversal into the downside. Obviously, we would wait for confirmation to validate this theory, right? Don't just hold yourself with what I said. This is just, this is not financial advice. This is just for educational purposes only. So, honestly, this looks bearish to me. We did break above the 50 SMA, but it's highly unlikely we could hold this range, because what you also want to look at is this supply zone we have right here. Right? It just rejected off of this supply zone, but it was coming close to and rejected off of it. So what you never want to do is hold on to contracts if you have a huge I'm so sorry, I didn't know that there was a person with. Can you guys hear? Were you guys not able to hear me a little bit ago? Was it hard to hear me? I just realized that my mic was unplugged the whole time. It was just my laptop that was having the mic working. Damn, I'm so sorry. I did not hear that guy having his mic out loud. I'm so sorry about that. That's pretty rude of him. Okay. As long as you guys heard me. But yeah, the greatest rule of thumb is when your contract reaches 20% or 30% loss, it's always best to just cut your losses and just look for the next time to enter. There's no real reason to hold on to a trade, because if you just hold on to a trade, oh, you have a 2% loss? Okay, then never mind. if you okay, alright. One thing no one talks about, and I do not know why barely anyone talks about this. It's very risky to swing over the weekend. You literally should, like, there's barely any time where you should swing over the weekend, unless you like literally have the most solid analysis ever. Because there's literally 2 days where there's potential news that could come out, whether it be for the market as a whole or the stock itself, and that can just absolutely ruin your portfolio or your position. So I don't know why analysts don't talk about this, but definitely do not look to swing any contracts or like that over the weekend. That's just very dangerous. They got good news with Microsoft. I actually don't keep up with news as much. I trade more off of technical analysis versus news. And there's been an old saying that you should always trade the rumor and sell the news. What that means is the second the news comes out, people who've been buying the rumor are going to start selling to take their profits, right? So it will actually work against your favor if you try to enter in a position after a news comes out, right? So that's why trading news is always risky. You have to trade it the right way versus just what's it called? Just trading after the news. But since we already plotted this out, let me just quickly plot out these supply and demand zones. Right, so for DDOG, we have a supply zone at, what's it called? 159.79. Oh wow, I got it perfect again. Okay, oops. A second. Okay, and for the demand zone, it starts at 121.93. And guys, even if you don't trade the stock, still put these prices on your put these zones on your chart itself, because it's just important, you know, because it's just, why not have it on your charts. Let me take a picture of this. Dang, wow, we got 8 tickers we went over today. That's nice. That's absolutely nice. Honestly, I don't think we're gonna go over all of them. I hope you guys can understand, because it's actually getting, it's not 55. It's not too late, but it is getting a little bit late. So we'll just do for now. We'll just keep on continuing, because why not? Why not? The crowd wants it. Give them what the crowd wants. Alright, so the supply and demand zones for DDOG was just posted. Now let's just go to the next ticker, which is AMD. AMD. Alright. I made the mistake of betting on the market on Friday and bought a few stocks on Friday right before market close. At first I was up like 1%, in only 10 minutes, but the market has gone down, especially with all the treasury invert news. Tillery puts. What's Tillery's what is it? What's the ticker? Isn't it like TLRY or something like that? Am I wrong? Oh, sweet, I got it right. Okay, dude. I'm sorry, but why are you only looking at penny stocks, man? I don't know. This is kind of. It's just stuff you can afford. We should look into trading options. You know, then you can. But Tillery puts. I mean, I guess so. It's just if there's continuation on Monday, right? Then maybe it's a good idea too. Let's see if we can go according to any, because we could potentially fill this I said pill. We could fill this gap up, this tiny gap up we had. We could fill that up, right? So it depends. This could actually this unfilled zone can actually work as support. So we have to see, right? We have to see on Monday how it opens, because if it actually breaks below this gap down, below this gap fill, right? Then you could actually get into puts to trade like the downside to basically invert trade this bullish candle, right? So what I mean by that is, let's see if I can draw this out some way. Okay, I guess you can't really show. If you were to break below this, right, you could possibly look to trade puts till this area right here from 6. If we break below this, right, and we break below the high of this candle, right, or this closing point of the candle, you can actually look to trade puts all the way down to $6.30. Versus if we bounce off of this potential gap fill, then you could trade all the way up till probably right here, which is 840, right? So, yep, that's how you would trade that. Those would be your two profit points. So if you break if you break below this area right here, then, and if you break below this close of the candle, then you should look to trade all the way down to $6.30. If you bounce off this gap up, we could potentially see either trading up to $7.80 or $8.39. So hopefully that answers your question. Did we already look at PayPal? Bill voting? What's that? I didn't know. Do I trade off of the Wyckoff logic? Yes, that's the first strategy I ever learned, and I based my own strategy off of that, so yes. What % down would you say to going on? Okay, I think I answered this question. I guess that's why you said understood. But did we look at PayPal? No, we didn't, so I guess we'll look at that next. Let me actually just post a quick screenshot of... Let me actually put this on the watch list. Actually, you want no, I'm not gonna put this on the watch list. But I'm gonna put that right over there and name this entry. Alright, let's look at PayPal, since I feel like a few people asked that. Oh wow, I've not seen PayPal in a while. This is sad. It's just like Netflix, actually. It's crazy. Well, let's see. Hi Kanashi. Dang, there's no real demand zones to go based off of. Yeah, because the last demand zone that we could possibly look at is all the way like in last year, literally last year, a year from today, a year ago today, which was in April. So we could technically use it as a support, right? So let's actually switch over to candles, and we could plot this low right over here as the where's this low? It's at $82.07. Okay, so this is obviously going to be our support for PayPal, right? We're not going to consider this as a demand zone because it's less likely that there's still unfilled orders all the way from April of last year. So we can see that PayPal has recently gapped down, right? And since then we still have to fill this gap down with from between the price of, let's see, 172.48. Let me see if I can get my cursor there. Okay, that's close enough. We have to fill this area right here. This is an unfilled area from the previous gap down, right? So PayPal still has to fill this. This can also work as resistance. So we can say, okay, so this is kind of tricky because this would be tricky to look at, because theoretically, right, we can plot a supply zone right here, right where the last bullish candle was before this bearish drop. But then we also want to plot out the gap up. So actually, let's see if I can make this easily readable. So we'll plot the supply zone right here, right? We'll plot it. We'll label it right now. Let's just label it really quickly. Let's see, when did this supply zone start? It starts at 169.78. So this is a supply zone we can use, right? Obviously it's way higher than the current price, I know that, but it's just obviously important to plot down. Then if you switch to candles, what we can do is we can put a line over here, and we can say potential gap down fill, right? There we go. That's how you can show it. That's the potential gap down fill. If we break above this point and we hold, we could potentially fill this gap all the way up to the upside. But now when it comes to PayPal, let's see where some resistance is and some support. So support, it's kind of like Netflix right now, where it's trading within a range. So let's just extend this to the left. Let's just plot this, extend to the left as well. So this is going to be the top range, or we'll just say resistance. Well, let's just say top range, right? is the top of the range for PayPal, and this over here is the low range, right? So again, I told you how to trade these ranges, right? So definitely keep an eye on this. We had a fake out just like Netflix. Is that Netflix? Yeah, it was Netflix. These charts actually look very similar. If you guys actually look at it, you know, there was the gap down. We're trading between a range. So that's pretty cool, right? It's basically what you want to look at. But let me take a screenshot of this so I can post it on the Google Doc. Second. Sorry, AAPL. Alright, this is a supply zone. I'll get to your guys' questions because I see that we have a few. But just give me 1 second. I hope I'm not boring you guys with all of this. I definitely hope I'm not boring you guys because this is definitely helpful. Alright. Top range. Should I really just let me just put a screenshot. Now let's put in notes. Could potentially fill gap down. Probable entry into calls if we break above, what was it, 119.72. And let's just put picture. Why can't I take a picture? Oh, there we go. Look at me, I'm being all professional like. Okay, alright. Let's get to questions since a few of you guys have questions. Alright, let's see. How can you tell if a certain supply and demand zone or support and resistance level will hold and not be broken through? Also, after supply zone, S&D zone has been retested once, do you ever use it again, or do you just discard it and move on? Well, okay, so to answer the first part of the question, how can you tell if S&D zone or SNR level will hold and not be broken through? It's all based on volume analysis, which we went over yesterday. I believe you're on the live, but I'm not exactly sure. So I will look to post that video tomorrow, and I'll be posting this video actually in a few hours, like the current live that we're doing right now. And I'll post the volume analysis live tomorrow, so that will answer this first question, since I go in depth about how to use that. And then also for the second question, where you say also after a S&D zone has been retested once, do you ever use it again? Well, it depends what you mean by retested. If you're talking about where the stock just goes near it, like it does in this example here, then that's not when you discard it. You only discard it if it breaks through the zone, right? That's when you discard it. Or when it's been just a huge amount of time, like we're talking like 2 months plus, and that's when you would discard it. But you wouldn't discard it if it just tests it once and then has a reversal. You only discard it if it's broken through, right? If the stock breaks through the zone. So hopefully that answers your question. Yeah, thanks for saying this. Yeah, in the first live that we had about supply and demand zones, I kind of showed, I answered this question basically over here. Dumb question, what indicator is that on your chart? The blue line on the main chart? That's not a dumb question at all. So this line here, I don't use it as much, but it's actually the 50 SMA. The way you would use it, the way I personally use it, right, when it comes to the Heikin-Ashi strategy that I talked about, basically anytime, basically anytime the stock, like let's say we, let me just quickly redraw this supply zone right here that we had. I believe it was like right over here or something. But basically the way you would use it is, let's say you trade up into a supply zone, like right over here in this instance, and we get rejected and we start trading down into the downside. The second it trades below the SMA, you would get into puts, because this is like extra confirmation. I necessarily don't use it as much, but that's how you do. And it's vice versa for demand zones, right? Let's say if a demand zone was right over here in this area and we bounced off of the demand zone and we start trading upwards, the second the stock breaks above and closes above the 50 SMA, you would enter into calls, as it would be like extra confirmation for the for your position, to get into a position. So that actually, hopefully that answers your question. Can you explain what gap ups and gap downs are and how they are caused? Also, when a gap down happens, why is it that if the price breaks the level, will fill the gap all the way? So gap ups and gap downs are basically big movements that happen during the pre-market or aftermarket. It's mostly from the aftermarket to the pre-market, right? So we're talking about like aftermarket close, and then the next day in the market before the market opens, like the pre-market, that's when like a price would either gap up or gap down. And what I mean by gap down is like when the price moves a huge amount in a like a day or something like that, right, over the pre-market. Like right over here is an example of a gap up, because we were at 440, right, and then we gapped up in pre-market all the way up to 443. So this is a gap up, right? And you could see later on, just as I said, within a day or two, like a day, 1 to 3 days SPY, I told you, it literally 90% of the times it always fills the gap. We see that it eventually filled up this gap up, right? This is part of my SPY strategy that you guys keep on asking to learn. This is part of it right here. You trade you wait till you find confirmation that SPY is going to either fill up the gap up or gap down, and you just trade accordingly, right? So like what you would have done in this scenario, if I were to literally tell you my thought process, is I would have put a support level right here, and if you broke below the 441.83 and we held, I would have you know, easily taken puts at this range. But yeah, and then what's it called? Gap downs are basically the opposite, where it gaps from a certain price down to a lower price in the pre-market. And why does it fill the gap all the way? Well, that's just how it is. I don't know. It's just like stock psychology, I guess you could say. Can we do AMD and NVDA? Yeah, I'll definitely do that. No, I haven't gone over AMD, so I'll go over that. DDOG, it's on the Google Doc, so if you check that, you'll see. But going to AMD, let's see. Oh, AMD, we already have a few. So we had the supply zone. We had 2 supply zones, so let me remove this one, right? Oh, we actually did break above this supply zone. So, okay, first of all, we have this demand zone right over here. Let me just extend this. Whoops, that's not what I meant to do. So we have this demand zone right here from, let me just label it so we can see exactly when it starts from. It starts from 104.93, right? So that's when the demand zone starts from, not supply zone, sorry. And we do theoretically have the supply zone right over here, but let's see. Let me try to extend this. Starts at 123.76. No, not 123. It starts at 119.37. Right. So we do have this supply zone that I plotted a while back. The only thing with it is we kind of broke above it, but we didn't hold above the supply zone. So that's why I still have this, because it still can be somewhat respected in the future. So that's why I still have it. So we have the supply zone from 119.37 and we have a demand zone at 104.93. So what you could potentially do is look to trade the reversal of this demand zone right over here, right? So keep that in mind since we are approaching the demand zone in the first place. So let me take a picture of this and post it on the on the Google Doc. So the support, not support, so stupid. The supply zone is from 119.37 to 123.76, and then we have the demand zone from 104.93 to $100.09. So that's AMD, since I've been pushing that off. No, it's no problem at all. It's a pleasure of mine. Whoops, that was a horrible voice crack. But yeah, that's AMD, since I kind of put that off, since you guys were asking about that. We'll try to do the supply zone, the demand zone you want to look at. When it comes to resistances and supports, ooh, I did not see this. There's a potential gap down that you can fill too, right over here. So we can actually look to enter calls if we break above this right here. Alright, let me just if anyone's gonna ask me why I have light blue and pink as my color scheme, just because I thought it looks cool because it's a cotton candy theme. I know, I'm really stupid sometimes. I am really stupid. Okay, let's see. Notes, from notes over here. Possible call entry above, what was it? 116.45. Let's make this to not play. I don't like using the word play. To trade the possible gap fill. Oh man. There we go. I made it smaller. Whoops. That's not good. Okay, since it's running late, I want all of you guys to type in tickers that you want me to go over, right? And whichever ones are the more popular ones, that's the one those are ones I'll enter off with. So if you guys could start typing in the Ask Bishop chat, that would be more appreciated. Most appreciated, sorry. I mean, yeah, you could swing PayPal, but it's way too early to choose a direction, that's for sure. Yeah, AMD does look nice. Oh, what's up, Rock? Dude, I've never. I'm glad to see you on here. No need to thank me at all. It's a pleasure. Okay, so we'll do NVIDIA, then we'll move on to Tesla. Since Rock, I've been dying to have him on my stream, so I'll have Tesla. Right now, we'll do NVIDIA since NVIDIA got requested twice. Do NVIDIA and Tesla. So let's see. Let's look at NVIDIA. Alright. Okay. Let's see why I have the supply zone in the first place. So on the 2-hour chart. Yeah, it was the 2-hour chart. Let's move to Heiken-Ashi. Okay, so the supply zone is actually no longer validated because we broke above it and we did close above it, so it's not worth it to keep. Is there any supply zones that are worth looking at? Yes, there is. Let's go back to the 4-hour. Do this. Oh my gosh, I keep on choosing the wrong thing. The supply zone we'd want to look at is from, let's see, for NVIDIA, the supply zone would be from 302 to 298, right? We did recently have this break above the supply zone we had right here. So this is the new supply zone that we would look at. We will not look at this one since theoretically it's just a continuation of this supply zone. So that's why I'm not plotting this as a supply zone. We went over why in the first supply and demand zone video, so make sure to watch that. And then we have a demand. Do we have demand zone here? I'll see. Yeah, we could just say we have a demand zone right here, just for reference. It's going to be a little bit weaker since actually this demand zone was created over here and it's continuing over here. So there's this demand zone, there's also this demand zone right over here as well, which we're actually touching right now. So let me just label these for you guys. Whoops, wrong thing. So this is going to be a demand zone. Starts at 262.99. Right, and then we have a second demand zone which starts at 1 second, let me just type this out, which starts at 221.30. Change this right here. If you guys do not have Thinkorswim, you don't have to necessarily trade on it, but you can literally open an account for absolutely free, and you could use their charting platform, which in my opinion is probably the best. It's better than TradingView in my opinion. That's again my opinion. But yeah, you guys could seriously just call them, open up a free account. It takes less than, I think, like 15 minutes, not even 15 minutes to get it set up, so I think it's definitely worth it. I've personally used thinkers from literally my whole trading career, so for 9 years, and it's not really failed me when it's come to charting. But okay, we plotted the zones. Now let's look at candles. Let's see if there's any important resistances. I mean, the only important one would be this one right here, because it's actually respected a few times. If you actually could see right over here, right over here. So this is actually a very important resistance that we're going to be looking at. So let's write over here, resistance. Right, so this is basically our chart for NVIDIA. When it comes to trading this resistance right here, I mean, you can enter in calls, but it's not going to be that much profit since there's a supply zone. So there's a possibility that we can break this resistance right here, right, for on NVIDIA. We could hold and we could break above it, but there's also a huge possibility that the stock will reject either on or before it reaches the supply zone. So that's why it's risky to actually enter in above this resistance. So why did I plot this? Well, you can look to actually trade the reversal to the downside, right? Because there's a huge, not huge, but there's a decent amount of space between this resistance and this demand zone. So what you want to do is, most likely, if there's confirmation of a reversal into the downside, then you would enter into puts and play puts, right? So that's how you'd want to play this resistance. You could obviously play calls, but you would have to be very cautious with them because there could be an imminent or a sudden breakdown because of the supply zone right here. So let me take a screenshot of this so I can post on the Google Doc. Just give me a moment to type stuff up on there. So we do have the supply zone right here that starts at 298.24 and it ends at 302.27. Then we have the demands. We have two demand zones, right? So we have demand zone 1, which starts at 262.99 and ends at 256.27. Then we have the second demand zone, which starts at 221.30, whoops, and ends at 211.88. Then in the notes, right, we can say that there is, let's take a screenshot of it. Oh, look at a screenshot. Okay, there we go. We got a screenshot with the supply zone, so we can explain here that okay, so the best way to trade this resistance level is to trade the potential reversal due to the risk there would be if entering calls on the breakout due to the supply zone. Surely both. I'm like writing an essay over here. My English teacher would be so proud. Not my English teacher, my composition teacher. My bad. What the heck did I just do? Okay. Tesla. Tesla's the next stock. Do you guys have any questions? Let's see. Good night, man. Sleep well. There's no suffering. Hey man, I feel like this is a stupid question. No such thing as a stupid question. But on my chart for AMD, I don't see the same gap downs that are on your charts. Are these gap downs and gap ups only visible if you use hike and ashy candles? For AMD, let me see. Usually do the AMD. No, when I looked at the AMD gap ups, I used the candles, and you could see in the candles, what you probably have is you have extended hours on. So if you turn off extended hours, you'll then see this gap up and gap down. Like I don't have the pre-market and aftermarket showing right now. That's why there's the gap in the first place. NVDA is good for calls right now since it's hitting the demand zone. Let me just check again. It's never good to enter anything without confirmation. So let's see. Yeah, so theoretically, if Monday opens and we see more bullish action, right, bouncing, then we can enter into calls because it's bouncing off this demand zone, right? But you still want to wait for confirmation. You don't want to just enter it right away without confirmation because you can actually just see more into this demand zone before we actually trade with the upside. So you're going to wait for confirmation before you enter it with calls. Is it better to have extended hours off? This is because pre-market hours moves usually don't contribute to the market moves during the day. It's personally better to have extended market hours off because only sometimes you can make support and resistances off of big movements in the pre-market and the aftermarket, but otherwise than that, it's just really noise, and it just takes up so much space on your chart. And if you do have extended hours on, you will never really see you won't really see much of gap ups or gap downs, which you can trade to fill the gaps and stuff like that. So I would recommend having the extended hours on, in my opinion. Absolutely, no problem at all. It's a pleasure. But okay, we'll do after Tesla. We do probably one more ticker. So again, if you guys could just put in a few tickers right here, and I'll see which one is the most popular one, and we'll go based off of that. Let's head on to Tesla. Seems like I already plotted a supply zone for it, but we did break above it, so let's remove this. So you can already see I have already a few zones that are still valid that are plotted out. So let me just extend them so you can see them. Just give me 1 second while I do this. We already 2 demand zones plotted out. Let's see, do we have any other demand zone? Yeah, we do. We have a tiny demand zone right over here, actually, on the 2-hour chart. Over here. Let's label that actually right now itself. So we have this demand zone, and it starts at 10.10.86. So 10.10.86. Right. And then when it comes to supply zones, we already broke one. The only other one right now would be right over here which is actually a pretty big supply zone. Sorry if my voice sounds bad again. It's actually a pretty big supply zone right here. Let's label this as well. We actually rejected off of this supply zone. I remember I had it plotted earlier. I don't know why I removed it. But we have the supply zone right here for Tesla, which is actually pretty big. And let's see. It starts off at $1,126.48. Right, that's what I said. Yeah. So we have a supply zone right over here. It's pretty strong too, because based on the strength of the movement afterwards, right? So this is actually a pretty strong supply zone. So if we actually test it, we can actually see, we can expect a more retrace down from this supply zone all the way down to this demand zone, which is pretty neat, right? So we have 3 demand zones actually that we can look at. Now when it comes to, oh, okay, sweet. Okay, so this is even better. So actually, there's a gap up right here, right? And we can actually trade to fill the gap. We would enter into, we could possibly enter into, what's it called, puts. Right over here. If we break below, if we break below $1,051.89, then we could actually enter in puts, right? And we could enter in puts and trade all the way down till near this demand zone of $1,010. So that's actually a pretty good entry for puts, to be honest, if there's obviously confirmation of continuation to the downside, right? So this is basically our chart for Tesla. Let me just take a screenshot right over here for you guys. So we have the supply zone that starts at $1,126 all the way to $1,208. Then we have 3 demand zones. Not all of them are going to obviously be met in the future time, but we have the first demand zone that's the most likely to be tested soon, right? Which is at $1,010 to $998. Then we have the second demand zone, which is $923 to $907, right? These are just roughed out. I'm just rounding. So the exact numbers are on the screenshot, which is on the Google Doc. And demand zone 3, which is all the way down here, is at $775 all the way to $758. And then, what the heck just happened? And then for notes, what we can do is take a screenshot of this. Oops, no. Take a screenshot of this. Make it smaller. Whoops, that definitely didn't help. Okay, so for notes we can write that possible entry into puts after rejection of supply zone and breakthrough of $1,051.89 to trade the fill of the gap up. Sweet, okay. Let's see if did I do snow? I guess I could do snow since there's no what's it called? No tickers. No other tickers you guys are requesting. Alright, so snow will be the last one. And then it will be done for now. Let's see. Snow. It's a nice neat little chart. Easy to identify some zones already right here. So we have a demand zone right over here. Right. Then we have a supply zone right over here. Right, and then we also have a supply zone right over here. So let's label these zones right now. So this demand zone, let's see. This demand zone, just give me 1 second while I label this. This demand zone is from 172.41. Right, then we have the supply zone, which is let's see, 1 second. It's from it's from 262.24. I basically got that. And then there's this second supply zone, which is from 297.44. Right. Let's just extend this 14th. Show this. Alright, so okay, those are the zones. Now let's see if there's anything support and resistance wise. So just like what was it, Netflix? What else? What other ticker like this? Was it NVDA with this gap down? Let me see. I just want to go back for a reference. It was PayPal. My bad. It was PayPal. So similar to PayPal and Netflix, we could actually see, unlike PayPal and Netflix, we're breaking above to actually fill the gap, right? So we actually broke above this resistance, but we broke back down below. So if we break above this, right, there's a potential gap fill. And if we break above, it's the high of this candle. The high is 246.52. So if we break above 246.89, it's a safe entry into calls, with obviously with confirmation. You know, don't just blindly enter. Name is too long. Oh my gosh. Are you serious? I outplayed it. Okay. Alright, so there's that, right? There's also a support. Right, there's two supports actually. There's one support right here. Whoops. There's one support right here. And there's also this support right here. It's just two supports. But yeah, let me take a screenshot of this. And let me type it down on the Google Doc. So we have a supply zone. We have two supply zones. So supply zone 1 is at 262 to 269. Then we have supply zone 2, which is from 297 to 306. Then we have a demand zone, which is from 1672 to 164. Then we have these support and resistance levels. There we go. But yeah, that's basically it. That's what's going on? Can the script be converted to TradingView or TrendSpider? Not that I know of. I do know that there's some people who said that there's a similar indicator on there, but I'll definitely take a look at it since a lot of people are asking. That script only works on Thinkorswim, but yeah, but I'll definitely look into it. Sorry about that. The reason why it's not on TradingView is because I actually coded the script myself, right? I had coded the script by myself. I had a little bit of help, but I basically coded by myself, so it's a custom script, so it's not like it's going to be on Thinkorswim publicly shared, right? You would have to get it from me, which I did share in the links channel if you guys are interested, right? It's absolutely free. Just right here, it says Thinkorswim buying versus selling indicator. It basically shows the buying volume, which is the light blue, versus the selling volume, which is the pink, right? So definitely take a look at that. Why did you have the entry into calls with confirmation so close to supply zone on snow? Oh wait, let me go back to snow. I'm looking at SPY and I'm like, what the heck's going on? Because this is theoretically not that close for snow. So like right now at 246, right? Snow could probably travel up to like 250 or 250, like 250, 251. Then it might maybe retrace down, right, or reverse down, versus the other stock, which was way closer, right? So that's why you could get into calls, but it would be like a day trade or a scalp. It's not like a swing. You know what I mean? So it's just a position you look at, but it's not too risky to enter because there's still room for it to run. before it could have a possible retrace. That's why I said that. But yeah, it would definitely be a lot. It would definitely not be a lot more riskier, but your risk to reward ratio is smaller, since technically this space is, it's not that much space to run with. Let's say you broke through this. Let's say you broke through this support right here, right? If you broke through it below this support, your risk to reward ratio is huge because you have a lot of distance to run down and a lot of distance for those puts to gain profits, right, or gain value. So your risk to reward ratio is better on this versus the calls over here. So yeah, I definitely get your point on that. It's just like something you could look at. Obviously, you enter trades based on your risk ratio and your not risk ratio, risk tolerance. So yeah. But does anyone have any questions? Oh, Sky High was on here. It's pretty sweet. Alright. Wish but I'm unable to attend right now, but you guys are super fortunate to able to have Kevin. Sure he would be able to talk down on it. Shut up. I'm just playing with him. He don't worry. Oh yeah, what do you guys think of the new logo? Joey made it for me. Pretty sick, right? It's the bishop piece. I thought it was cool. Yeah. Alright, I'm gonna give a few minutes for questions. You guys type questions in Ask Bishop channel, and I'll get back to you guys. I'll give you a few minutes. Okay, so I'm back. No worries, it's a pleasure being on. The volume and price analysis video will be posted tomorrow, or basically today. And yeah, it's definitely something you should look at because it's important. Snow is getting close to its gaps, yeah, so definitely keep a look at that. QQQ needs to be pushing first, absolutely, since snow is in the tech sector, I believe. When you talk about stop loss at a certain price, you mentioned stock price, but how does it convert to option price? Well, okay, so you won't, that's just like basically it's more of a mental stop loss. So let's say like you set a, for example, a stop loss. Let's say you get into puts. No, say you get into calls, right? Like right over here, and you set your stop loss to the 206.22. You're not actually setting a stop loss for 206.22. You're more or likely like setting like an alert, right? That could give you a notification if it ever goes below 206.22, and that's when you sell the contract. Obviously, doing this is a little bit more riskier since it's not going according to the option price. So you could actually be in a bigger loss going according to the stock stop loss versus the option stop loss. But if you actually have the Thinkorswim mobile app, you can actually set stop losses based on stock price. Just as an FYI. It's actually pretty cool. I've used it a few times. But let's see. Again, it's my pleasure. But it seems okay. I'm gonna wait for Chris to stop typing. I mean, finish typing, not stop typing. Oh, okay, all right. But yeah, I guess that's it for today's live. Pleasure being on with you guys, and I look forward to whenever the next live will be. I'll probably be posting this video tonight on YouTube. I'll try to since it's late, but I'll definitely try. But good night, guys. Sleep well.